Punch, which is a trading platform for first-time traders and part-time investors, has raised $7 million in a funding round led by Stellaris Venture Partners, Prime Venture Partners and others, along with angel investors like Kunal Shah of Cred and Nitish Mittersain of Nazara. The company is going to utilize this fund to innovate on its newly launched safety-first single-screen trading platform. For more about the company's plans ahead and this funding, I am now joined by Amit Dhakad, the CEO and co-founder of Punch. Amit, thanks very much for your time here on CNBC TV 18. Start by very briefly taking us through your journey at Punch, what the platform is doing differently in terms of providing safety for traders who may be new to the market and the gap that you're solving for.
With Punch, right, over the past decade, what we've seen is access to stock markets has been democratized, right, which is fantastic. But there's been a surge in participation, which has also led to risky behaviors, overtrading, widespread capital erosion, right? And we believe that these challenges, right, are deeply rooted in human psychology. So while SEBI and the regulators are taking their big strides in this particular direction, we at Punch are skilled in product design and behavioral science. And hence, we are developing intuitive safety-first tools and a safety-first trading platform, which will enable the young first-time traders to navigate the market with confidence and caution from day one, actually. So the product is just designed in a way that people can intuitively start their journey with a lot more, application of risk management, capital management, and don't fall into the trap of over trading, over position sizing. That's essentially what we're doing.
Well, before we get to those regulatory concerns, this $7 million that you raised in the seed round, how exactly do you plan to deploy it?
So we, in the journey that we are in, we have been trying to find a meaningful problem which is large enough to be solved for this industry, right? And I think now we see where we can actually apply our skill set to be able to do that. So this funds that we have raised, majority of it is going to be deployed in research and development, given that we are a product-first company. So our goal is to understand the traders, identify the problems, and experiment with solutions which can create and inculcate new habits and behaviors in traders when they are starting off their journey in this market, basically. So most of it is going to be in research and development.
So Punch is currently in beta phase, as we understand, but give us a sense of how many users you're adding on a monthly, on an annual basis, the targets that you have for the year ahead in terms of the market share as well that you can capture.
So right now, I think the goal is to go from the 18,000 Demat accounts that we have to about 1 lakh Demat accounts, because that gives us a very good sample size to be sure of a meaningful problem, right? Post that is where the market share, strategy really kicks in, basically.
Well, how would Punch be positioned in this market, between new age players like Grow, Zerodha, Upstocks and whatnot, and then traditional players on the other hand? How do you envisage growth for the company from here on?
Our dream is to create a very large scale impact with our ideas and our products in the trading, in the stock market space. And now that dream cannot be fulfilled by anything other than having a very substantially large market share. So our goal at Punch is to be able to, create that. So in the next few years, our target is to cross the 40% market share as far as trading is concerned.
Well, before we let you go, we have to ask your take on the SEBI consultation paper on curbing F&O speculation. Will it not impact your business because the paper recommends cutting down the number of expiries per exchange to 1 per week? Is that really going to serve the objective of reducing retail participation in F&O?
So I think, firstly, it's commendable that SEBI is actually taking these measures. And, these will hurt revenues of exchanges, brokers, and others in the short term, right? I think, but it's great that SEBI is still willing to take those steps. It's only a temporary course correction, right? Which is necessary for the industry to go in the right direction. So I think SEBI is doing its part. Punch, with its safety-first trading tool, wants to do its part. So, and my request to everybody else is also to do their own part without worrying about, short-term impact. Because if we all do our bit right, then this temporary pullback that we're doing will only allow us to create a beautiful foundation for another explosive growth of 6, 7, 8 years, right? Before we hit the next roadblock for ourselves. So I'm not too concerned about the short-term impact, and I think the regulator is doing a commendable job.
All right, Amit, we're going to leave it at that. Thank you very much for your time.